Hi, it's George Nordhaus, and here is Monday morning. Today we have something we have never had before in all these years, etc., and that is an analysis of some risks that you may or may not be able to, you may or may not see, you may or may not be able to understand what's in them, but there's so many things that are happening in the world today and new businesses and so forth that I thought it might be a great idea to get somebody who's a top underwriter, et cetera, to say, well, how do you cope with all this? What should you tell the agent? And so I went to State Auto, and they're old friends anyway from many years, and I asked who's the guy, and they said Craig Andrews is the guy. He's the one who is the head of the development officer, product development officer there of business insurance, and he really understands these things. Here's Craig, and he understands them better than just about anybody. I looked at his biography, and he and I have been about the same places at the same time a lot of times. I was a Navy veteran. He was a Navy veteran. I'm from Indiana. He went to Indiana, blah, 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 blah. But look at that CPC, ARM, AI, AUM, AU. I don't even have any idea what half of this stuff is for, but whatever it is, Craig's got them. So he does know what he's talking about. Okay, Craig, it's your nickel now. Let's get started.
Well, thanks, George. I appreciate it. Happy to be here with you. First thing I want to address is wondering if our listeners have seen or used any of these services. I must say I actually rode with an Uber driver a few months ago, but I didn't even know it. I was at a seminar in Chicago.
Yeah.
Seminar was over. 5 of us needed to get to Midway quick. Colleague said, I got an app for a service. She texted somebody. The next thing I knew, a big black shiny SUV arrived, and a professional-looking driver smelling of cologne got out and helped us with our bags. The vehicle was clean with bottled water and the Wall Street Journal. We all got to Midway efficiently. We paid him $88, and that was it. Later, I learned I'd ridden with an Uber black driver. We'll be talking about that later.
Oh yeah, that's great. My wife did too. She's been in one. I haven't done it yet, but she went to Los Angeles Airport a few weeks ago and tried it and liked it. So anyway,
yeah.
Now there's different services that they offer.
Right. Uber's just one. Lyft is another major competitor. Sidecar. There are all kinds of permutations of this, and if you've been watching the news, especially the business news, you know that this is just going on all over the world.
Oh,
frankly,
yeah.
A
lot of argument about it, but go ahead.
Right, and you know, generally they're known as ride-sharing services. I've seen recently them referred to as ride-hailing services.
Oh, how about that?
But there's Uber, there's Lyft, there's Sidecar, and initially today I think we're going to be concentrating on this ride-sharing service, often known as transportation network companies. So.
Yeah, there's what you go to. If you go to Uber, that's what you find. Well, they're looking always looking for somebody to drive for them, aren't they?
Oh, that's absolutely right. You know, it's just amazing. I saw a thing back in May in the business news that Uber expects 1.5 billion in revenue this year.
Well, that's not too bad for the third year or something, is it?
No, exactly right.
I'm not quite doing that. Let me, you point out something to me that I thought was very interesting. The difference between the kind of, I thought everybody was an Uber driver no matter what.
Right, and as you can see on this slide, we have on the left, we have a description of what they're looking for in their Uber Black program that I mentioned earlier, as compared with UberX. And you can see there are 2 different, I guess you could say, categories. I don't know if it's levels, but on one hand you have Uber Black that requires a chauffeur's license, commercial insurance, a commercial license on the vehicle, and they're very specific. You know, they say you got to own a black sedan, town car, or crossover SUV that, as you can see here, comfortably seats 4 passengers, and that's contrasted with UberX, where all you need is a personal license and personal auto insurance. You have to be 23. You have to have a mid-size or full-size car, and those are the two different categories. I don't know if they're paid any differently. I have a feeling they are, but yeah, as I mentioned, it was the Uber Black that I was with, and it was frankly impressive.
I can imagine. I never have seen one like that, though. Well, let's talk about ride sharing.
Yes, this has been really blowing around since the 1990s, and initially, how the effectiveness of it was hindered by the relatively crude technology at the time. But as technology advanced and we moved on to iPhones and Android devices and all of that, all of this became a lot more viable. And as all this grew, and like a lot of things, it seemed to start in California, as a result of some earlier litigation, San Francisco in 2013 created and defined under the law this new service known as a TNC, or Transportation Network Companies.
Yeah.
And these folks have faced regulatory opposition, of course, everywhere, especially
yeah.
from the taxi folks. Yeah.
Yeah.
And of course, the growth is exploding. As I mentioned, they expect $1.5 billion in revenue just in Uber this year. We saw this happening here in Columbus. All through the spring, as you can see here, there are multiple articles about Uber, Lyft, ride-sharing in general, and as you can see there in May, our assistant city attorney here in Columbus characterized them in the Columbus Dispatch as black market taxis.
Well, they are a way, aren't they? Really? I mean, I can understand both sides of that argument, and I really can. But we have it here in Santa Fe, the same kind of argument going on, and I guess they have them here, so they must have them. But whatever. So big question.
Right. So the issue for us is that what's this mean to the insurance industry, and really TNCs have operated in pretty much of an insurance limbo since their creation, and this limbo became publicly illuminated a little over a year ago now with the tragic death of a 6-year-old girl who was struck along with her mother and brother while crossing a San Francisco street. Uber claims the driver wasn't transporting passengers at the time, so their insurance didn't apply.
Oh, brother.
The personal auto insurer denied coverage, saying that the driver was searching for the Uber app for fares, so the livery exclusion applies, which we'll talk about. So all of this really shined a spotlight on this whole mechanism. So we're going to start with our discussion here to talk about the personal auto policy. It seems to us that most TNC drivers or operators are going to be insured under a personal auto policy, likely without telling their agent. Maybe because of youth or naivety, and so let's begin there, and to this basic fact here, the standard ISO personal auto policy excludes a livery conveyance under all of the coverage parts. Now, you might ask yourself, what's a livery? Well, the policy doesn't say so, so we go to Webster's, and you can see business of keeping vehicles that people can hire. That's exactly what this is. I went to ERMI, take a look at what they said, and they said pretty much the same thing. And actually there are cases that go back 65 years relative to this that confirm that. I'm not going to read all of these slides, but this is just a sample of the liability exclusion. The important piece here in the personal auto policy is in every single part, an insured has a different definition. So we can tell here with this livery exclusion, there's no coverage for liability. You go on to the medical payments on this on what you're seeing here, same deal. The PAP, by the way, is very careful to exclude coverage when the vehicle would be used as a livery conveyance, but when a family member is riding in a livery conveyance, there is med-pay. So it very carefully makes that distinction.
Huh. I'm learning more from you about underwriting than I ever have in all these many years. Yeah.
Well, it's very interesting to me. I've seen some pretty brutal claims, especially in uninsured motorists, which will be popping up next year, for people actually riding in taxis and in other forms of livery conveyance, which actually kind of works the same way here.
Right.
So, you know, as you move on here through our slides, you can see here there's the exclusion. We don't provide UM coverage for BI by any insured while occupying your covered auto when it's being used as a public or livery conveyance. That's the distinction. If it's something other than your covered auto, well, there would be coverage. But an agent can quickly see if they have a client that's using their car as a Lyft or an Uber driver, there's some significant coverage limitations. And you know, unfortunately, having spent 19 years as an agent myself, one of the first things I learned was that the last place you're going to hear about what your insured is doing is from your insured often.
I'm sure that's true. They don't want to. You know, why wouldn't? Well, there was another one.
Yeah.
You mentioned Lyft. Now, we've been talking about Uber a little bit. Lyft is much smaller. I looked up Lyft after I never had heard of that, to tell you the truth. 300 some odd million in funding when they started, but Uber had 3.3 billion. Are you ready for that? Lyft's in 65 cities. Uber is in more than 250 cities. So obviously, Lyft is not nearly as big as Uber, but same problem. I guess you got same deal no matter who it is, huh?
Right. They're all livery conveyances. And so Lyft and for that matter Uber has recognized that there are shortcomings in the personal auto policy that a lot of these drivers are going to use. Mm-hmm. And as a matter of fact, you can go out there on their site. You can see the link here, mm-hmm. And there's actually very extensive information on insurance for folks to consider as they to decide to become a Lyft driver.
Yeah. Yeah. Let me go back to that slide one time, just 1 second.
Yeah.
I want to suggest to people they come back to this. If anybody ever says to you, "I'm going to be a Lyft driver," this is a great place to come back to, wouldn't it?
Absolutely. As a matter of fact, probably agents ought to be, forewarned and pre-armed to even go in there before they even hear about it.
Right.
Now, when you get into that site, you can see that through, frankly, Marsh and James River, Lyft offers contingent coverage for all those coverages we talked about that are excluded in the personal auto policy. Uh-huh. They provide contingent liability and excess liability, excess uninsured motorists, with these limits that you see here. When the vehicle's in driver mode, but before a ride is actually received, mm-hmm. They provide those limits for liability. They aren't the greatest limits, but it's better than a sharp stick in the eye, I guess I could say. Yeah,
I do too. But I mean, are these in addition to whatever else the individual driver has on his own?
Well, this is designed so that when the individual driver when their coverage becomes excluded. That's the contingent part of this title.
Yeah.
When the coverage is excluded by the PAP, that is when this is designed to come into play.
Got it.
Yeah. The excess liability is an optional. Mm-hmm. For Lyft, we're just using Lyft here, George, as an example of what some of these companies do. They all have their slight different tweaks on this.
Yeah, I'm sure they do.
Yeah, and as you go further through here, as you may recall from our quick run through the slides, collision and comp is also excluded under the personal auto policy. What Lyft is saying is, hey, if you have comprehensive collision on your own auto, we're going to provide this contingent collision that comes into, and comprehensive, that come into play when your policy excludes coverage.
I got you.
And you can, and you can see it's $2,500 deductible, $50,000 limit.
Yep.
So they're obviously seeing the limitations that their drivers have in their own insurance. Just coincidentally, here are some requirements that Lyft has of their drivers. Once again, I emphasize, this is just Lyft, okay? It's interesting, they got to have a car and an iPhone or Android. Those are some pretty...
Yeah, we got to do that, obviously.
Yeah, basic requirements, yeah. And, you know, I've mentioned this to my wife. She said, well, how do I know who I'm getting in a car with?
Yeah, exactly.
They
exactly.
do. Yeah, right. They do have background and DMV record checks, but you know, as far as those go, Lyft inspects the vehicles. Now, where Lyft requires 21, Uber requires 23 under that Uber X program. Here's some interesting stuff. Think about this for a minute. I don't want to press too much of your listeners' time, but under Lyft's contract, they make that driver solely responsible for any and all liability resulting from, or alleged to be resulting from, the operation of the vehicles. I ask yourself, or I'd ask you to ask yourself, what policy covers any and all liability?
I don't know of any. Tell me one.
Right,
I'll buy it, will you?
Right, and see, that's the problem. These folks sign the contract and they obligate themselves to things that their insurance may not cover. I just saw, for example, George, not long ago, where Uber and Lyft were both sued by 3 wheelchair-bound individuals in Texas who allege that Uber and Lyft discriminate against the disabled by not providing wheelchair-accessible vehicles.
God.
Well, auto insurance doesn't cover that.
No, what's
that? Yeah, right.
I would have thought that.
You know, and of course, and you know, George, as you and I have discussed, one of our problems in our business is we're always so slow to respond to societal changes.
Well, that's why we're having this conversation today.
That's exactly right. So you can see Lyft also indemnifies and hold harmless, or the driver agrees to hold Lyft harmless for any of these things we're talking about here. And you know, the personal auto policy doesn't have a lot of contractual liability. I love this. Any other activity in connection with the service.
A little broad.
This, you're right, and you're right. And the ironic thing to me is, all of their insurance requirements center on personal auto, and yet I see a lot of exposures that aren't covered by personal auto policies. Some of these may or may not be covered by a CGL. How many of your 23-year-old kids are going to go out and buy a CGL? Or right, exactly.
Well, so, go ahead, finish. I'm sorry.
Yeah. I was just going to say, so there's gaps aplenty here.
Yeah, I think that's the message that we're getting. Well,
that's exactly right.
I think you've really done a wonderful job telling about that side of the. When you started, you said there are 2 types of services, and the other one is car sharing.
Yeah. Now this one is pretty interesting. This has just been popping up recently. Some of the examples that you might see out when you peruse in the internet are relay rides, Spride share. There's also dozens of these. If you go out to the relay raids, the relay rides site, you know, you'll see this. Rent your perfect car. Put in the city, when you're going to pick it up, when you're going to return it, and it takes you to finding finding a car. There's sections in here entitled "Put Your Idle Car to Work,"
mm-hmm. Yeah.
Learn more.
Yeah.
There's also quite a site there on how Relay Rides works.
I have thought, Craig, and the more I've dealt with you here over this time that we've been working together, I'm amazed at how many of these things, these concepts, are coming along because of, well, I guess mobile apps is a good answer, but because of communications. I mean, here's one to rent your car. The other one was to rent your driver. Travel agents have their problems, as you know. I mean, it just goes on and on and on. I don't know when it's going to stop, but it's amazing to me that whatever business you're in, you better not sit back and wait till something happens, because it's going to happen.
That's exactly right. That's exactly right. It's proactiveness that we need to keep in mind. And frankly, these IT applications are moving a lot faster than we even can.
Oh my gosh.
And that's one of our problems.
Wow.
Now here's the interesting thing. The unendorsed ISO PAP doesn't exclude coverage when an insured rents their vehicle to someone else.
How about that?
And and like the slide says, whoever thought of renting your car to somebody you don't know anyway?
Yeah,
okay.
I can't believe it.
Right.
I wouldn't. I don't think. I'm sure I wouldn't.
No. Right. And, ISO, of course, is concerned about this. And back in October 2013, they even introduced this new exclusion, the PP 2316. Right. This just excludes all coverage while the covered auto is enrolled in a personal vehicle sharing program while being used by somebody else.
Yeah.
And companies are putting that on all their policies.
Oh, I didn't know that. Wow.
Yeah. ISO-based companies are as some of them with state rate changes, some of them all at once. So, if we turn the page to the BAP, we find a little bit different problem. Let's look at the BAP, the business auto policy, in regard to ride sharing. Well, first of all, the BAP doesn't have any livery exclusion in any of its sections. And of course, the reason for this is the BAP could be used to insure a taxi or some other livery conveyance operation. Mm-hmm. Recall that to qualify as an Uber Black driver, one of the requirements is they must have commercial auto insurance. Uh-huh. This might be a clue as to one of the reasons.
Yeah.
So, anyway, this is something that the BAP was designed to be used for all types of commercial autos, including public autos and liveries. As all of your audience knows, standard line insurers don't generally do that, but the policy form itself could be used that way. So you might ask yourself, how do insurance companies control their exposure to livery conveyance risks when they have a BAP that doesn't have any exclusions? Well, as usual, through underwriting guidelines and pricing.
Yeah, what else is there?
Yeah, the same as that's one immutable characteristic of underwriting. There are some basic principles that are always there.
Yep.
So, where does that peer-to-peer ride-sharing driver get their insurance? Well, it's probably going to be from some specialty or E&S market, perhaps under some version of the business auto policy. But, I must quickly add here, George, just recently, just in the last several weeks, 3 companies, to my knowledge, have introduced programs for policyholders working for ride-sharing services in specific states. For those of your listeners who are in Indiana or Illinois, Erie Insurance has introduced a program for their personal auto for ride-sharing drivers. Farmers has introduced a program in Colorado. That's also a personal auto play. Now, Geico, just in the last few days, we've learned that that Geico in Virginia has introduced a policy to be used by ride-sharing drivers. Their entry is based on the commercial auto platform, which you know, I know I'm on the underwriting side, but frankly, that's what makes most sense to me, because the business auto policy is what is used for vehicles used in business, and that's the underwriter side of me.
Well,
you know?
I have a question for you. I probably shouldn't ask this. I didn't tell you I was going to ask it, but what's auto? I mean, what's state auto going to do?
Well, we have no plans right now to do anything about this ride sharing exposure other than avoid it. So, and by the way, George, something I didn't tell you is one of my friends is an independent insurance consultant, and he recently found premiums in the E&S marketplace for a vehicle used in peer-to-peer ride-sharing operation of $1,000 a month. When the driver revealed up front it was being used in a ride-sharing operation. So that was just one consultant and one search, but that kind of gives an idea.
Well,
you know, when you can,
it's not cheap, and you can you can see that now you begin to understand where the taxis have to spend so much money, or the firms, or whatever. It's difficult. Or the rental firms.
Exactly right.
All right, now we've talked. Excuse me for interrupting, but we've talked about the writing and all that sort of thing, and then we began to talk a few weeks ago about Airbnb. Let me go back a little bit here. This is Airbnb, and I think everybody listening to this probably heard about it. This is a Google page. I just went in there to see it. Airbnb, or here's other pages of theirs. Notice that they always say here that rent unique places to stay from local hosts in 190 countries. Can you believe that? I mean, that's unbelievable. They are, and incidentally, it's a great website from the standpoint of these pictures are really kind of interesting. I enjoyed them thoroughly. Then they've even said what's most popular, and they divided them that way. And I don't know where they're going to be in the future. And there's a lot of controversy on this, but I don't think you haven't heard the hotels complain about it as much as anybody does. But tell us what Airbnb's about.
Well, as you said, their come on is the ability to rent unique places to stay from local hosts in 190 plus countries, and what that boils down to is an online platform that connects hosts who create listings for accommodations with guests seeking to book accommodations, and that can be anything from an apartment bedroom in Chicago or a loft in New York to a mansion on the side of a hill in Utah. And to me, it almost feels like an online version of the old-fashioned classified ad section of the newspaper. But in this case, the hosts, the people that register as hosts, pay Airbnb 3% of the rent only when a successful booking is received. So
they receive their money. That is, that the renter has received the money.
Right, and you know, up until that point, they don't pay Airbnb anything apparently. The generic term for this is called home sharing.
Yeah.
And once again, it looks, if you go out on their site, you're introduced to their founders. They're all some good-looking young guys that got together with this idea. They have an excellent website. I must say it's comprehensive in every way. And under that website, you learn that Airbnb automatically provides to all hosts $1 million host guarantee coverage. Now, this is what an insurance person would think of as property coverage. Mm-hmm. They also, in multiple places, recommend that hosts seek the counsel of an insurance professional.
That's good.
They offer an online 24-hour payment service for hosts. They verify the guest IDs and the host IDs. They have a sophisticated messaging system for both parties to the contract. They provide profiles of each other. They provide confirmed reviews, which is one of the interesting things I think that pops up a pretty big personal injury exposure.
Mm-hmm. Right.
And yeah, and they also require hosts to hold Airbnb harmless. Wow. For all liability.
Yeah, I can see that they would.
Yeah. Now they don't accept liability for the conduct of its hosts, and they don't provide personal liability coverage for hosts under its host guarantee benefit. Uh-huh. Now, I might stop here and mention that if an Airbnb host has an ISO-based homeowner policy, and that includes a tenant homeowner policy as an HO4, the liability section of that standard ISO homeowner policy does exclude liability assumed under an insured under a contract. But, this is a big but, the exclusion doesn't apply to written contracts that directly relate to the ownership, maintenance, or use of an insured location, or where the liability of others is assumed by the insured prior to an occurrence. So home sharing hosts that have a homeowner policy should be in pretty good shape from a liability perspective as long as the limits are adequate. And tell you what, an umbrella wouldn't be a bad idea. But they're also very straightforward that they don't pay on a replacement cost basis under their home guarantee benefit, and they also don't assert that host guarantee benefit takes the place of a homeowner policy. So, some thoughts for agents. Back up that previous slide, George. Yeah. Other than that HO 0541, extended theft coverage for residence premises occasionally rented to others endorsement, current homeowner policies don't yet address all the exposures of that Airbnb host. ISO's talking about it. They had a meeting back in October that some of our folks attended. Its conclusions weren't too profound. They decided that the exposure is kind of uncertain because insurers don't tell their agents they're doing it, of course. They're worried about the personal injury exposure. And ISO's decided they're going to continue to monitor. Which,
we've heard that song before.
Yeah, exactly. It's the same old, and of course that's the problem. So there's currently no uniform industry response or cure for this home sharing exposure. And I would just say that as you said, you mentioned early in this conversation, George, very good advice. Agents being everyone, frankly, agents and companies, trying to be as proactive as they can. Well, I would say that agents should begin now to include home sharing questions in any exposure questionnaire they might use when they propose, place, or renew homeowner coverage for their prospects and clients. And as usual, I will say this as someone who's been there, we should expect that agents will be directly in the line of fire when claim controversies erupt, when one of these things happens, especially if you don't know it.
Yeah, we're going to have a lot of, you're right, you're going to have a lot of experience on those things. There's no doubt about it. What I read somewhere, and I don't know where, Craig, this is correct or not, so I'd have to qualify it. I read that Airbnb in this short period of time that they've been around has more rooms under contract or whatever they call it, under agreement, than all hotels in the world put together. Can that be? I don't know. That's a hell of a lot of hotels in the room. But I don't know. Can you imagine? Well, I guess my point to say is that any agent out there that thinks he probably is not going to ever have any Airbnb customer might better rethink that thing, because he probably will, or she.
Oh, that's right. From both ends, not only as a host, but perhaps one of their clients would end up being a guest.
Oh yeah.
So yeah, good. it goes in both directions.
Well, let's summarize here what we've got.
Okay, well, all of these new mechanisms are all based on the idea of advanced technology and the idea of sharing. They're proliferating rapidly. They all do recognize insurance challenges as their concepts, but there are some insurance issues because, as we mentioned, the standard PAP excludes all coverage when a transportation network company driver using their vehicle in that way. Some form of specialty commercial auto coverage is likely the current solution. The new approaches are being discussed and developed all the time, and the home sharing situation is definitely in its infancy. I might quickly add here, George, that I frankly don't see the major no coverage issues on the home sharing side as on the auto side. Yeah, I'm not saying they're not there. I'm just saying they aren't as extreme.
No, I'm sure you're right. Well, what would you last thing I could say? Okay, I'm now an agent and I'm in Columbus, Ohio, and I've got somebody who just signed up with B&B. What do I do?
Well, I think they need to get together with the underwriters for the companies that they use for personal insurance,
right?
And see what their position is. And I would also say that if your client comes to you saying that they have that they are, for example, an Airbnb host, that the agent is halfway there already because they know what's going on.
That's great. They know what's going on because Craig Andrews is the one who told them. For at least for a start, at any rate. You don't mind answering, what if an agent doesn't represent you? Can he still drop you a note?
Yeah, there'll be some things I probably will be
yeah, you couldn't say.
Probably not want to say, but yeah, I'd be glad to have.
That's nice.
I answer frankly a lot of agent questions, and always enjoy it because it's that's where the action's happening. Is out there in the front lines.
Well, boy, I tell you what, you've worked very, very hard on this, and I greatly appreciate it, and I know our fans, our friends will too. My suggestion, once again, is to have this forwarded by agency managers to their CSRs or the producers or whoever else, so that they do know what they're doing and make sure they make that step. So
right, the first step's awareness.